Hello, everybody. Jerry DeMaio from MortgageDadZoom.com and Family First Funding. And the topic for today is the weekly mortgage rate update for 2/10/2023. And it wasn't a great week for mortgage rates. We've seen mortgage rates continually rise since last Friday's jobs report. And there are a lot of different reasons for that. But nevertheless, mortgage rates are up about 0.375, almost a half a percent just this week. So we were at some of the at after the Fed on Wednesday, we saw some of the lowest levels we've been at in 4 months, and today we're back to the highest levels we've been at in a month. So that's the update. Now, Tuesday we have a real important CPI report. The inflation numbers come out Tuesday. We're all hoping or expecting to see again that inflation is coming down, and if we can continue to see inflation coming down, we should see rates get better. So I'm going to bring on Barry Habib, but I'm going to give you a little preview. But I'm going to ask first, please subscribe to the channel, and please don't forget to like this video. So I'm going to share some information from Barry Habib. I'm going to bring Barry on with and what he's leading into. So we saw mortgages and the bonds open up a lot weaker this morning. And why did that happen? It happened with some information from the Central Bank of Japan. And just so I could give you a lead in, and you're going to get some additional information here from MBS Highway and Barry and Dan Habib. They're going to talk about some of the housing predictions, interest rate predictions. So I think it's really good. I think you should watch. I think you're going to listen. It's very educational. I watch all the time, and I stay educated, and I'm asking for you to stay educated as well. So here we are. I'm going to share, and go ahead, Barry. It's to you.
The great Kazuo Ueda. So before we appoint a central banker, wait a minute. It is Ueda who will be the new central bank chief in Japan. And the reason why it's moving the markets is because the previous thought to be central bank chief that was going to be appointed, Amamiya, was a little more dovish. However, Ueda is more hawkish, and that's why we're seeing yields rise. And we're also seeing sympathy for that here in the U.S. Mortgage-backed securities. They were down quite a bit more. They've recovered. They're only down 16 basis points as we're talking to you right now. And the 10-year yield is also rising. So we're going to have to keep a watch on this, because one of the important things is yield curve control. Now, interestingly enough, I spoke to Lacey Hunt about this. I spoke to Peter Bookfarm about this. And they both have opinions on this. They slightly differ. We all feel that if the Japanese decide to move their control on their 10-year yield, which right now can float in a range up to 0.5%, and it's right now at 0.5%. If they decide to raise it or do away with it altogether, yields there will rise. European bank yields will rise. And here in the U.S., we should feel some of that effect. So that's a negative. Now, Lacey Hunt is very adamant that this will be ephemeral, meaning it'll wear off after a little bit of time, and the factors here in the U.S. will take over. Kind of in a microcosm of that, we're seeing that this morning, where initially it was a big response, and now it's kind of softening and weakening. We're going to keep a watch on this and see if there's any changes that occur. But for now, mortgage bonds taking it a little bit on the chin, but not too bad.
And you know what else didn't help mortgage bonds yesterday was a weak 30-year bond auction. Unlike the 10-year auction we saw the prior day, which had really strong demand, 30 auction had weak demand, and that certainly pressured mortgage bonds and treasuries late afternoon yesterday. But I wanted to break down with you a housing expectation survey from Pulsenomics and Zillow. And this is one that Barry partakes in on a monthly or quarterly basis, I should say. And this is something that we've won 3 Crystal Ball Awards from. It samples up to 150 of the top economists in the United States. So here's the latest report that I'm going to share with you. You can see in this latest edition, it was the Q4 2022 Home Price Expectation Survey. And in this one, they had 117 participants. And they were asked what their expectations are for home price appreciation over the next 5 years. And on average, it's 23.3%. Now, most people's time horizons in a home is, maybe 10, 11, 12 years. But with all the negativity in the media, it talks about a housing bubble. What is the outlook from some of the smartest minds in the economy over the next 5 years? 23% cumulatively. What does that mean? If you buy a $500,000 home today and you get 23% appreciation, That's $115,000 you would gain in appreciation alone. Make sure to explain this opportunity to your customers. It's hard to sift through all this negativity, tough to have a contrarian mindset, but there's an opportunity out there right now, especially because you can negotiate. You can get some price breaks. You can do things like 2-1 buy downs out there, and you have time. You can get an appraisal. You don't have to buy the house sight unseen. Make sure to get this message out to your customers and quantify the opportunity. Something else on this report, they were asked about where they see interest rates. And you could see the vast majority of participants thinking that the highest rates over the next 2 years, we've actually already experienced here in Q1 of 2023, meaning they think the peak in rates is in and that rates are going to be moving lower going into the next 2 years, as of course is our expectations as well.
And Dan, speaking of housing market surveys, today's your last chance to take the MBS Highway Housing Market Survey. Scan the QR code on your screen now or click the link in the description below. For news next week, the highlight will be Tuesday's inflation data from CPI. We'll talk a little bit more about that on Monday. And before we go to the charts, yesterday's bond coupon rollover was small, 8 basis points. You'll see that on the charts, but it won't affect your pricing.
Well, thank you, gentlemen. Let's go right to the charts, and we'll see that we're down 22 basis points right now. We are breaking above this important level of resistance that had been hanging in there at a Fibonacci level. So we're now piercing above it. But today's the first day that we're kind of floating free. We're not attached to it. Let's see. Could we see, and this is, by the way, on the 10-year Treasury. Let's see if we could come back to it. If not, we do have overhead resistance at the 100-day moving average. So let's hope that holds. Let's take a quick look at mortgage-backed securities. And mortgage-backed security. By the way, the 10-year Treasury is at 368 now. It was at 371 earlier, so it is softening. Mortgage bonds, man, I'll tell you what, a couple of pretty good calls on locks. If you take a look here, the one that we had before the jobs report certainly was a very good lock call. And then the one from yesterday did save us quite a bit here. But now we're looking at, once again, mortgage bonds looking like they're breaking underneath this floor support. We do have the 100-day moving average here. With locks in place, the damage done, and hopeful that we could get a softening after the initial knee-jerk reaction to them resisting Amamiya and going with the great Gazoo, wait a minute, we're going to start the day carefully floating.
So there you have it, the update from Barry and his team at MBS Highway. And so we're a little bit worse on mortgage rates this week, but still we're nowhere near the 7% range anymore. We're way off the highs. We're not at the lows right now, but we're somewhere in between and looking forward to a weaker than expected CPI report next week. So if you have any questions or want to get information or have a one-on-one, please go to, I have something new here I'm gonna share with you. You could schedule an appointment, go right there, take a little picture of this. You could schedule your one-on-one appointment with me, Jerry DeMaio, or you can go to www.mortgage-zoom.com and you could have a one-on-one appointment that's going to look a lot like that. And thank you again for joining. Please, please, please don't forget, please subscribe to the channel. Please don't forget to like this video. Thank you again for joining. We'll see you next week. And let's hope for some of those inflation numbers next week to be coming down. Thank you and have a great day.